I'm going to show you how I trade a stupidly simple discretionary strategy and consistently make money. Let's jump on the charts. We'll randomly backtest this and I'll walk you through it. So I'm going to do this through Zoom, share my screen. Let's go to a random number generator. And I've got like 14 pairs on my chart. So we'll click this a couple times and we got 2. That's actually the pair I had something live on, AUD CAD. So I'm going to open up AUD CAD on like a Wanda. And let's go to the 1 hour. And I'm going to put this in replay mode. I'll cover my eyes with you here. I'll scrunch out on the charts. And then I'll walk this thing back super far. So eyes are covered, not looking, walking it all the way back. And then let's bring it all the way up here so I don't know what's coming up next. Boom. Okay. Reset the chart view. So we're on the 1 hour chart. We're on AUD CAD. And what we're going to do is identify trend. I mean the most basic trend identification. We're going to draw out some support and resistance. And then we're going to buy as it's going up and add in profit. And we're going to sell as it's going down and add in profit. If it moves against us, we're going to cut it. We'll start with a 1-to-1 risk to reward ratio, and we'll see how this goes. So I'm going to stick on one time frame for this just to show you that it's easily done on one time frame. Here's my trend identification. It's going up. very complex there. Higher highs, higher lows, higher highs, higher lows. This looks like it's at a resistance zone here. But guess what? It's going up, and it's tested this multiple times. I think it's going to break. So we're going to put this at one standard lot. 100,000 is one standard lot. And yeah, we'll do this with position tools. You know what? I'll do it without position tools just to make it really simple. We're just going to buy. We'll cut it as it's moving down. My invalidation for something like this would be down here. Profit's going to be somewhere way up here. I don't see anything to the left, so I would let it run. So guess what? We're going to start this off with a buy. I've got it in 10 times speed, and let's see what happens. Starts to push up a bit. We're moving into profit, and what did I say we're going to do? We're going to buy again. Done deal. Yep, I'm going to leave a stop loss right here if it comes down. Oh, that's right. Wait a minute. Come on now, guys. TradingView got really cool for us, and we got some position tools. We've got some stop losses moving. Nice. So let's go ahead and play it forward. We got a second buy in there. Still pushing up. Let's buy again. Bring the stop loss way up here. And maybe we get stopped out. We'll see. We take plenty of losses. We didn't. So we're up $3,282 on the first one. Done deal. Simply by identifying trend, drawing some support and resistance. We bought at a resistance zone. Crazy, right? And adding in profit and moving stop losses up to control risk during the trade. We don't want to continually add and leave our stop loss, way far away because we're just going to continually increase the risk. So let's just keep this moving. Get rid of this line. Actually, we'll clear everything from the chart. No, I won't do that. Mess anything up. So we're still going up. It came up, formed a new high, came back down to, we would call this like a support, a prior high broken in an uptrend that is coming down to retest. Simple break and retest. What are we going to do? You got it. We're going to buy. We're going to put a stop loss way under here. We got $1,000 of risk. We'll set a simple 1-to-1 to start. And I'll play this forward a little bit slower just so we could make an educated decision. It's coming up. Yeah, I would probably buy right there, just arbitrarily. I'm going to leave this stop loss. I'm going to leave the stop loss there because if we come up here, it makes it real tight. Let's play it forward, see what happens. If it starts to come down and break lows and trickle towards the stop, we can cut it early. Yeah, I'm going to go ahead and cut it. So here's our discretionary system. I bought at the support here. It didn't come up and break this high. Instead, it came down and broke these lows. Do I think it's as likely to work out? Well, it's still in an uptrend. It's still not technically breaking this low, but I'd rather exit now for $1,000 loss, move on to the next trade, wait for this to resume, and take a small partial loss, half of a loss or less than half of a loss, and make sure our wins are, 2 or 3 times bigger like this first one was. So let's go ahead and flatten. We'll play it forward. Okay, so would have came down and stopped us out. So we saved ourselves there another unit of risk. If $1,000 is 1 unit of risk, we saved ourselves another $1,200 there. So let's play it forward and watch what happens from here. No crazy indicators, no crazy complex strategies, knowing where the banks are buying and selling and where the liquidity is. Not needed. So we're forming a downtrend here. I'm going to draw a resistance zone. It kind of came up and tapped this right here and then pushed down. Here's another zone right here. I'd probably wait a little bit longer if I was trading this to make sure it's going to continue, although it looks like it's going to. Okay, we're going to get ready to sell. Yeah, I probably would have entered a sell on that one, so let's go ahead and enter the sell here. We'll put our stop loss way up here. And a TP down here. Because if this is going to continue, we don't want to see it come way up here. We'll move it up a little bit. You know what? Let's go with nice and wide to start, and then we'll be able to bring it down. If it comes all the way up here, we want to be out of the trade. It's not a downtrend anymore. It's breaking highs. It's pushing up. It could wick up here and then continue down, but for the sake of doing this, we're going to use stop losses in a simple, easy to identify place above some prior high. If we're selling, or above some prior low if we're buying. So let's go ahead and play this one forward. It's moving against us, coming up, breaking these highs. Yeah, it came up and checked them. Now it's on its way down. Let's just let this one play out and see if it moves back down into profit. If it comes down here, past this low, I will sell again. We'll add. Pushing up. Don't really like price action. We're in it now. Okay, we got stopped out. Still in profit here. And look like we got another small uptrend. I'm going to go ahead and buy. Pushed up, broke all these highs. It's in an uptrend. It's continuing this, if we zoom out, this much higher time frame uptrend here. Let's go ahead and buy. Boom. Stop loss down below these lows. Take profit at 1-to-1. Do we have a structural level? Yeah, we're going to put a take profit right there. Yeah, we'll maintain a 1-to-1. Let's go ahead and play it forward. Moving into profit. What are we doing? We're buying in profit. And we're going to drag the stop loss up. If it breaks these highs, we'll buy again. Yeah. Let's go for it. Came down and stopped us out. Okay, we're negative 2,441. This happens. You're going to have about a 50% win rate with this. You're going to take a bunch of losses, but if we continue on with this, at the end of it, we should be in profit. We're making a little bit more on our wins than we're taking on our losses. That's the game plan here. Not predicting the market with any reasonable sense of confidence here. Let's go ahead and play forward. Might have been some news. We got some big volatility. It's pushing back up. I'd wait for a retest of this level right here and to push back up, because otherwise we're going with a stop loss down below here, and that makes it really low. Okay, we get a retest. Let's see, does it start to push up from here? Does it come all the way down and break some lows? Ooh, it's coming all the way back down. And we might move into some consolidation, but we're looking, no, it's pushing back up. We're looking to trade with the trend. Still in an uptrend. It's not breaking these lows. Let's go ahead and enter a buy and throw our stop loss down here. Our TP up at a 1-to-1. And let's see if we can knock out a couple more wins with this, with add-ins. And we'll call it a day. Buying in profit. A little bit of drawdown. Not pushing up the way we want, but we would still sit in it. We've got our original stop. Consolidating, started to push up and break some highs. We're going to buy again. We're going to move our stop loss up here to maintain a reasonable amount of risk. And we're going to buy again there. We're going to bring our stop loss way up here. Let's see if we can hit the target. Nice. Simple as that, guys. We're up 1,000. What are we going to do? let's continue buying. We could also not be setting a TP, but just for the sake of this, we're going to do 1-to-1. We're buying in the uptrend. Let's just go ahead and buy without waiting for any kind of retest. We'll throw this up there, about a 1-to-1. Play it forward. Came down, stopped us out. Let's see what we're looking at here. Let's continue playing it forward and see if we continue with this uptrend. I think we are. Let's buy. Let's go with a stop loss down here. TP at this prior high. Wow, look at that. Shot up into profit. We missed our opportunity. Let's go ahead and buy and bring the stop loss up here. Let's say we bought here and a little bit more in profit. So I hit that twice. Will we retest that high? Yes, we did. Back into profit, 2,300. And let's do one more. I'm going to go ahead and buy now. Stop loss below this zone just in case it comes and checks out that support. We'll go 1-to-1. Okay, let's go ahead and buy again in profit. We'll bring this up now. Let's see what we get. Comes back down and tests. Might get stopped out on this one. Boom, stopped out. Let's go ahead and take one more so we can end it on a high note. Again, you can see we're ending up about a 50-50 here, but we're maintaining profit because our winners are larger than our losers. Coming down. All right, we're going to look for this uptrend to continue. I'm going to say we'll wait for a little pullback and then we'll buy again. Ooh. Might not get that uptrend to continue. Let's see what we get. Pushing down. This might be the start of a turn down. We'll use this as a resistance zone. This is the most recent resistance zone. We're watching price come down. Pushing back up. Okay, so it did come up here, test, and now pushing back down. I'm going to say we'll get a little bit of a pullback here, and then we can sell. Boom. Stop loss. TP. Let's go somewhere down here. Let's move our TP way far out of the way, and we can close it whenever we feel like. We'll go for that strategy on this one. All right, pushing down. We're going to sell again. Almost hit buy. We're going to sell again in profit. Stop loss is still staying way up there above that high. Is this move going to continue? Maybe, maybe not. Some consolidation. We're breaking lows. We're going to go ahead and sell again. We're going to bring this down here. Boom. We're going to go ahead and sell again. We're going to bring it above these lows, above these highs, excuse me. And like we said, we got a TP that's way down there. Let's let it go. Still following trend. I'd say if it comes way back up near entry, we'll probably close this one out and we'll wrap it up. This would be a long trade. Okay, look at that. All the way to TP. $7,250. So what I'm trying to demonstrate here with this is you don't need 100 indicators. You don't need to know what the banks are doing. You're never going to know what the banks are doing. You don't need to know what the dollar index is doing and where the smart money is. You can use a simple system leveraging trend, support and resistance zones, and managing your trades. If that was live on one of my accounts, I would be actively managing those trades a little bit tighter. I'd be looking to close those losers before they run all the way to the stop. And I'd be looking to add more aggressively to the winners and bring that stop loss up even tighter. The goal here is to end up with somewhere around that 50-50 win rate, because if you start with a 1-to-1, you're randomly flipping a coin. You have a 50% win rate. With just randomly entering on a chart, less swaps, fees, commission, you're at 50%. So if you have less than a 50% win rate, you know you're doing something wrong. You're screwing yourself up by either having a messed up risk to reward, a way high, target with a tight stop loss that will skew your results, or you're letting fear and greed and emotions play a role. If you start with a 1-to-1 with a simple system and you manage your trades, when it's moving against you and it's starting to break structure and it's not looking as good, it looks like it's more likely to hit your stop loss than it is to hit your original TP. Then maybe you get out. You cut the trade a little bit early and you lose, less than 1 unit of risk. If it's moving in your favor, if it's continuing towards your TP, maybe you bet more on that trade. You capitalize on the winner because it's more likely to move towards that final TP than it is all the way back down to your stop. This doesn't take a super intelligent person to do. It's very, very basic. And where I find more time should be spent is on trading a flexible system that allows you to develop experience in the market, develop intuition, and also develop your mindset, your psychology, your emotional control. Because focusing on this sniper entry, trying to get a higher win rate than even a 50% win rate, you're trading focusing on those things that are more important, that will actually develop you as a trader, for this arbitrary, almost ending up discretionary every time attempt at predicting the market. Stop trying. I mean, in my opinion, most traders would be better served stopped trying to do that and to focus more on themselves and how they're reacting during the trade and how they're able to handle risk. A big piece of this that I'm not displaying here, that we're showing in backtesting with no money on the line, when there's actual money on the line, when there's risk involved, your emotions play a role. As that trade is moving into profit, you start getting fearful that the market's going to turn around, it's going to take your profit away from you, and you're inclined to cut it. When your trade is moving against you, oftentimes people will get hopeful. If I just wait a little bit, it doesn't really look that good, but it might turn around. If I get out here, and I see it turn around, I'll be upset. Your mind is screaming at you to do the wrong thing. There's books that help, for stuff like this, that are going to do a better job than me explaining it at the end of this video. But know that emotions and mindset and your psychology play an enormous role in your ability to actually trade this discretionary system and to use your experience. How do you develop some of that stuff outside of reading the books and understanding it, which I think is important, is to just do it, is to get into the market on demo. And then once you show, some consistent profitability, some signs of being break even, because then you're doing better than most traders, you jump onto a small live account. Again, I'm not a financial advisor. None of this is financial advice. I'm not telling you what to do. I'm just an idiot talking to you on YouTube about what works for me and showing you some backtesting results. So don't listen to anything I say. But maybe someone like me would start out on demo and then jump up to a small live account and start to feel that emotion. Say, okay, I know what I need to do. I can do this in demo. I could do it on backtesting all day. I end up profitable, time and time again, doing it randomly like you just saw me do it. Let me try this on live. And you'll start to feel that emotion. You'll say, okay, wow, there's drawdown now. Now I'm losing money on this trade. It's on paper right now, but I see this moving against me. And now you feel your palms start to sweat. You feel your mind tell you, oh man, you know what? Just wait a little bit more. Maybe buy again. It's almost always, your mind is almost always telling you, in my experience, to do the wrong thing. Your natural instincts work against you in trading, and it's something you have to work past. You have to develop. For me, it never goes away, but I develop a much different response. I feel that stuff and I go, yeah, I've been here before, 200 times. As you increase risk, I know what I'm going to do. I'm going to do the exact opposite. I'm just going to add to the trade. As it's going up and, oh man, it might turn around. It's really far extended. I'm buying more. I'm doubling up on that trade. As it's moving against me, I'm not going, oh man, I hope it turns around. I'm going, you know what? I'm going to cut it just like I did on that back test. I'm going to cut this thing here. And you know what? If it whips around, which it does about half the time, you're wrong when you get out, I won't be upset about it. I'll know that I limited my loss that I was showing right then and there based on market structure and price and something inside of me telling me, you've seen this before. When this happens, oftentimes what happens next is it goes to your stop loss. You get out. And over time, if you have developed that experience and that intuition, over time, your goal is to make a little bit more on your winners and a little bit less on your losers, which you can by adding to your winners and cutting your losers short. Have a simple approach. Identify trend, identify support and resistance zones where price may or may not react. Stop trying to predict the market. We don't know where it's going to go. You're never going to know what's going to happen next. It's not that it's 110% random, because it's hard to look at trends and say that's completely random, but you're not going to be able to tell what's going to happen next. What you can do is control your risk using support and resistance zones, using market structure to say, I want to be out of this trade. If I'm long, I want to be out of here when it comes down to this area, or vice versa. And you can increase your size as price is moving in the direction of your target, and you can decrease your size and close when it's moving against you. These are the things that make the market and trading very unique. So again, it doesn't take a brainiac to do this. You don't have to know the drivers behind the market and the fundamentals and what 37 indicators are doing, and having 14 confluences for your entry on a specific doji candlestick at the institutional level with the liquidity. It's unnecessary, in my opinion. You drive yourself crazy doing that. You take away from what actually matters: trading, price itself, and structure, and keeping things extremely simple. Figure out a way to manage your risk, have a risk management plan, understand how much you're going to risk per trade, and make sure that you're comfortable withstanding consecutive strings of losses, which will happen. It didn't happen on this, but oftentimes you'll get 2, 3, 4, 5, 6 losses. Hopefully they're not full stop outs, but you'll get them. And develop that risk management plan, back test it, get comfortable with the amount of losses that you can see and sustain, and make sure you're not at risk of blowing your account and you're comfortable with trading through that. And then focus on your emotions. Maybe journal a bit. Focus on how you feel during a trade. When you cut a trade that's winning short and then it continues into profit, when not only should you not have cut it, you should have added to it. And then try to understand why that's happening, and journal it as it's going on, and try to do less of what's not working and a little bit more of the things that are going to work in your favor. So again, that's my 2 cents on trading a stupidly simple system using very, very basic technical analysis. I like to call this stuff an approach rather than a strategy, because it's more of a set of guidelines that are going to get you into and out of trades, and you're not going to use black and white set in stone rules. You're going to use your discretion, your opinion, your intuition, your subjectivity based on the context, based on what's happening. So yeah, I believe most guys are much better off, especially early on, starting this way on demo, and work on getting to a break-even point, because we know that a whole lot more traders are losing money. Brokers post that stuff. It's publicly available information, like only like 30, 25, 30% maybe on the good numbers are actually making money. And then only the top % of those guys are making a decent amount of money. So yeah, this is what works for me. Again, I'm not a financial advisor. None of this is financial advice. This is not a suggestion or recommendation to do anything. I'm an idiot. You shouldn't listen to anything I say. I don't know anything I'm talking about. I don't have any certifications or qualifications to tell you how to trade. Your trading's done at your own risk. Make sure you read my full disclaimer on my website and in the description of this video. If this was helpful and you want to watch me do this live every day, I have a free Telegram where I post all my analysis, and I also run a Discord that I have open right now. You shoot me a message, join the Telegram through the link in my bio. shoot me a message on Instagram, DM, or an email, and I'll add you to the Discord where you can see all my trades. I do live trading. I answer any questions. We talk about this stuff. And hopefully that helps out. If you enjoyed the video and you want to subscribe and like, great. If not, good luck. Stay green.